Good afternoon, everyone. Today is Wednesday, July 31st, end of the month, also Fed Day. So this is a midweek update. We can talk about what happened. The Fed in general left rates the same as everyone expected, but the comments were a little more dovish than previously. While not coming right out and saying that he's going to cut rates in September, he basically said he's going to cut rates in September, unless something very strange happens. So he's going to be looking at the jobs number, which comes out. He's going to have two of those before September. He's going to have two CPI numbers before September. In fact, we have one coming up on Friday, and I'll get to that in a minute. So in general, the market liked it. Actually, the market started off in the morning thinking that that's what was going to happen. So it sort of took off. A lot of the large caps did well today. We'll take a look at all of that. Also, interestingly, a lot of the talking heads on CNBC, which I was watching leading into the Fed meeting, a lot of them were saying he really should cut today, but they didn't think that he would, but they said that he should. However, in most cases, they said whether it's today or September, it's not a big deal. But if he waits any longer than September, it will be a big mistake. So I think we're pretty much assured to get a cut in September. That doesn't mean we still got a lot of up and down to go through for the rest of the summer. But let's take a look at some of this stuff. Let me share the screen. And for those that are interested, my website is breakpointtrading.net. We'll use this for looking at some of the charts. And there's a free newsletter that I put out every Saturday or on the weekend, sometime on the weekend. So you can just click on that to get the newsletter, or you can register your email if you want to be reminded that it's available. So let's take a look at, first, let's take a look at what happened today. I'm going to use stock charts for this. So right here in the middle of stock charts, and this is free to anybody, this front page, I think. Actually, it might not be because it's on my dashboard. But anyway, it's on stock charts. It shows you right here the equities. This is the Dow Jones. And interestingly, take a look. So this is where it started, where that blue line is. That's the open. Pretty much went up all day. And then right here at 2 o'clock, when the Fed meeting started, it started going much higher. And at 2:30 is when Powell started speaking. And he ended right a little bit after 3. So this whole section right here is when he was speaking. And then notice that the market just sold off after that, interestingly. That's the Dow was up only about 0.25%. Actually 0.24%, so up $99. S&P was up 1.5%. And the NASDAQ did the best, up 2.6%. Small caps and mid caps really didn't do great. Moved up a little bit, but not too much. S&P 100 up 1.9, and the one that did the best was the NASDAQ 100, which is mostly the large cap technology names, and we'll take a look at that. And notice also that the VIX fell. So fear was starting to move out of the market with the comments from the Fed today. And we've got 7 weeks before the September meeting, and everyone is widely expecting him to cut rates then. You can look at bonds. 30-year bond, you can see that fell. 10-year fell. It's at about 4.1% right now. 5-year fell, moved up right during the meeting and then came back down. In fact, all of these kind of did that too. Just before the Fed meeting, it moved up and then they went down a little bit after that. Short-term yields and then 20-year bonds are moving up, and 20-year bonds, I think, will probably do very well, probably continue to move up into the rate cut and then after the rate cut as well. And then the dollar fell a little bit too. If we look at commodities, there's all the commodities. Here's gold. I have some comments on gold in a minute. So it took off pretty nicely. Silver did well today. Copper up 2.5%, but that was even before the meeting. It just leveled off. Oil, of course, with a lot of things happening in the Middle East, Oil was kind of expected to go up today. Natural gas went down. Gasoline was up as well, and corn. And then crypto. Crypto kind of fell off a cliff right at the end of the day. There's Bitcoin, Ethereum. I'll take a look at that in a minute too. Bitcoin Cash, Litecoin, all of them sold off at the end of the day. So let's take a look at these and kind of see what's going on here with the market. First thing, right on the front page of my website, you've got all of the main charts, including Bitcoin. If we look at Bitcoin first, you can see that it sold off today, but more interesting to me is this downtrend line. So going all the way back here to March, we've been making lower highs, lower highs, lower highs, lower highs, and then this week went up and tried to take that out, but couldn't and got rejected. So failure there. So it's making lower highs again and starting to head down. That is the definition of a downtrend. Not a very steep downtrend, but still a downtrend nonetheless. So Bitcoin looks like it might continue selling off. You can look at the S&P right here. I drew in this right shoulder, and you can see today we came up just about to that right shoulder. And tomorrow, if we go up some more, we're going to be right near the high of that right shoulder. So the next thing, most important thing, is to see if it takes that out. If it doesn't, and it starts to go down again, then we'll have to see if it breaks through the neckline, which is this area down here. If it does go through that and takes it out, then the head and shoulders no longer exists. And I will remove all of this from the chart. So right now we're really at a cusp. We'll see what happens. The NASDAQ did really well today. As you can see, it came back up and it's sitting right in that little area where the resistance is. So once again, we need to see if it's going to get through that area. That's an open gap right there. So we're sitting right in the open gap and right below the 50 and the 21-day moving average. So we've got to see if it can take that out. It's really important. In fact, tomorrow is going to be a really important follow-through day. It might be dependent on some of the earnings. We'll look at those in a minute. But all of the momentum indicators are starting to turn up here. This is the NASDAQ 100. Also, the Dow is here, and Dow actually is looking better than the rest of them. It did not take out the previous highs, but it looks like it might be getting ready to. This is a really good example of what I was showing before, where the market moved higher into the Fed meeting at 2 o'clock and then moved lower the rest of the day. And that's what a candle looks like when that kind of thing happens. Normally, it's not a good look. And this is the 10-minute chart right here. And you can see right here at 3 o'clock. So 2 o'clock when the Fed meeting started, 3 o'clock when it ended, market sold off right after the end of the Fed meeting. So I don't read too much into that. At this point, it's really going to be the follow-through that will be the most important tomorrow to see how that turns out. Okay, so and the dollar, if you want to look at dollar is actually sold off today, probably because of the Fed meeting lowering rates, and the 10-year yield down here, you can see that's continuing lower. So all of that looks like based on the Fed meeting today. So let's take a look at first a couple of charts that I created just the last couple of days. One is a comment that one of the folks out there on the YouTube channel made over the weekend. When I mentioned that, I was thinking about creating a bottom finder chart. And a couple of people said, yeah, that's a great idea. So I did. I created a bottom finder. It's right on the charts page in the second column, right underneath the 10-minute charts. So if we look at that for the S&P, I put these vertical lines where the bottoms were made previously, or close to that, actually right where the bottoms were. This is the one from April. And this is the one from last year where we bottomed right here in October 27th. And last year I said that's typically the worst day of the year. Every year, October 27th, or right around that day is the worst day of the year. So the way to use this is to just look at these indicators and see where they're bottoming. Now, as it's going down, you don't know, of course, if it's bottomed yet. These just keep making lower lows, lower lows. The market made lower lows. But if you look here, this is the 50-day, the percentage of stocks above their 50-day moving average. When this gets down here below 20% or below 30% for the 200-day moving average, that is an extreme level. So 20% of the S&P 500 means basically 100 stocks out of 500 are above their 50-day moving average. And for the down here, if it gets down to 30%, then that's 150 stocks. Those are extreme levels. The other thing to notice is that it went down here on this low, tried to recover but couldn't get above its 50-day moving average, and then sold off and made another low. However, the percentage of stocks below their 50-day moving average did not make another low. In fact, it made a higher low. So that is a positive divergence. Even though you don't see it up here on the other indicators, you do see it right there on the percentage of stocks above their 50-day moving average. So that's an important one to look at. So that was an indication. Everything else is making lows, but you don't know that yet. This one here was one of the signals. Down here, the VIX is at extreme levels above 20. So anytime it gets up into the extremes, and I got it here also in April, then that's when you should start looking for the low, because the VIX doesn't stay there very long. In fact, for those interested in trading the VIX, what I recommend is not trying to trade it when it's hitting lows. And by the way, this best bottom finder works pretty well for bottoms, but it doesn't work for tops or even middles. One person said, well, it looks like a lot of these things are still pretty high. So does that mean we have a lot more to fall? Well, we do have more to fall, but that does not mean that we're going to fall. So it doesn't really work for tops. We're trying to figure out when things are going to roll over, but it works pretty well for bottoms. So, and one of the most important parts is the VIX. So I don't recommend trying to trade the VIX. There are ways to trade it. There is a short VIX, the SVIX. It's an ETF if you want to short the VIX. But the best way to trade the VIX is wait for it to get at extremes. If it gets to an extreme above 20, then start taking the other side of that trade, because it falls pretty fast. You can see right there, it comes down pretty fast. It doesn't go up quite as fast, and it can bounce around the bottom and start to look like it's going up, but doesn't go up through this period here, even as the market was rising through most of this year. In fact, VIX looked like it was moving up. So you thought maybe you could trade it, but it's better to trade it when it's at an extreme, because it rolls over and goes down fast. Bullish percent index was at an extreme below 30. I put these lines in here for a reason, so you can see where the extremes are. So that's the time to start looking for bottoms. And the other one that was really interesting as well, and I pointed out this in the past, is the New York Stock Exchange advanced decline line. So the advanced decline line, as the market was going lower, made a low. Market made a lower low, but this made a higher low. Market made one final lower low, and this made another higher low. So there's another bullish divergence. So that was telling you that the market was getting ready to reverse and go back up. So that's the way I use this chart. And you can do the same thing for the NASDAQ. There's a bottom finder for the NASDAQ as well. Looks very similar, has the VIX on it. This is the NASDAQ advanced decline line. Again, the positive divergence. So you can use it in the same way. So it's one of the charts I added really based on everyone's input and saying that they would like to see something like that. One of the other ones that I added is, as I was thinking about this with gold, the gold is moving up lately, and a lot of people have said, gold's going higher, and it went higher today. But the important thing is gold outperforming other things? Is it outperforming the S&P? So I created a relative chart, which is found in this section here. These are all relative charts, so relative to something else. So I created one for gold and the S&P. So This goes back 35 years. And of course, I drew in in fact, let me turn on this. I drew in the secular bull and bear markets. I always like to see those whenever I look at a long-term chart. So what you'll notice here, this up here is a relative chart. And what that means is it's comparing gold to the S&P. And the way you do that is right over here in stock charts, you type in $gold with a colon in between, $SPX. So that's gold compared to the S&P. And the first parameter in that formula is the one that you're looking at to outperform or underperform. So if the chart is moving up, that means that gold is outperforming the S&P. And you can see all through this period right here, gold outperformed the S&P. From this period, because it's moving down, the S&P outperformed gold, or another way to say it is gold underperformed the S&P. So even though gold was moving up, that doesn't mean it was the best investment. The S&P was actually moving up faster than gold was. Right now, recently, right in this period right here, you can see that it's kind of going sideways. So it's moving up and down. So gold and the S&P are kind of like trading off between each other, which one's going to outperform. Could this be ready to roll over and start back up? Maybe, could be. But if you'll notice the secular bull and bear, it's pretty amazing how closely this trend matches the secular bear. It's the best time to be in gold. And the secular bull, which actually started officially in 2013, right there. So that would not be the best time. It'd be better to be in the S&P. That's not to say gold didn't go up and you can make money on it. It just means that the S&P went up faster than gold. And then if you also look at the dollar down here, notice that kind of a similar correlation. When the dollar is moving higher, gold is moving lower. Or I should say the relationship between gold and the S&P is moving lower. When the dollar is moving lower, it's the opposite. That's when the gold outperforms the S&P. So this is a really good chart just to remind you that it's not just whether gold is moving up or down, it's whether it's a better investment than something else like the S&P. All right, so let's now take a look at the jobs unemployment rate, which is coming up on Friday. My cold is getting better, by the way, but not 100% yet. All right, so here's the unemployment rate coming up on Friday. This is the SOM rule. Interestingly, Claudia Sahm was one of the people that was interviewed on CNBC today just before Powell started talking. And she was adamant that they needed to cut today. She also didn't think they would, but she thought all the signs were there that they really needed to cut today. She also said that whether they cut today or September shouldn't make that big of a deal, but if they wait any longer, it will be a big deal. And quite a few people said that. So this is the SOM rule from Claudia Sahm. And it basically is, and they actually asked Powell this question today about the SOM rule. And his comment was interesting. He said, well, the SOM rule is a technical indicator. He called it a statistical indicator, which kind of is the same thing. But it's a technical indicator that has been pretty well correlated with the unemployment rate and recessions. So the way the rule is worded, it says recessions start when the 3-month moving average rises by more than 0.5 point above the lowest 3-month average over the previous 12 months. So the 3-month moving average is this red line right here. So what I did was I went back 12 months for July, and then I went 12 months for August and 12 months for September. I looked at where the lowest point was for this 3-month moving average in each of those 12-month periods. And this is what I found. So for August, it's 3.65. If we add half a point to that, it gives you 4.16. For September, it's 3.7. If you add a half a point to that, it's 4.2, right there. Right now, we are at 4.1. So we are essentially at the SOM rule for July, below it for August and September, assuming it stays at 4.1. So that's the thing to watch on Friday. If it stays at 4.1, then the August SOM rule will be below the SOM rule. If it goes to 4.2, then it will be above the SOM rule. So that's going to be that when I say August, that's the report that is reported in August, even though it's for July. In September, it's at 4.2. So if we go to 4.2 on Friday, or say stay at 4.1 and then go to 4.2 in September, we will essentially be at the SOM rule for 3 months straight. So I think that is going to be one of the metrics that Powell will look at when we get to September. And I am pretty sure there's going to be a rate cut in September. And the market's pretty sure too. So if there's not, the market's not going to like that at all. So let's take a look at a few charts on the indexes and more importantly on the Magnificent Seven, because those are the ones that performed better today. And these are trend models. So the way these work is essentially, and by the way, I put in a how to use the trend models link in here too. So it explains how they work, the short term, the medium term, and the long term model, and what to look for, and what, on the chart technically, how to read the chart and what to look for when these things happen. So what this is every day I update this, and anything that's highlighted means it changed this week, this week. So July 29th, bonds went up. If we look at bonds, you can see bonds actually moved higher. Here's this pink arrow right there is the short-term trend. The blue arrow, which is the medium-term trend, and the medium-term happened way back in the beginning of June, and it has not given a downtrend yet for medium-term. And then the dark red one is the long-term trend. So you can see bonds are both long-term, medium-term, and short-term, even though it's whipsawed through here, but they're all in uptrends. And today it went up even more. So like I said, if we get a rate cut, I think bonds are going to go much higher. So that's what it'll look like for the indexes. And I have all these on here. You can see gold. Gold didn't change this week. It's actually been in an uptrend for all three. But you can see gold took off today as well, and it's moving up. And all of the indicators, the momentum indicator is just ready. Probably tomorrow, it's going to move higher. It's going to cross over. And the longer term one down here has already crossed over. So one thing about this is basically a MACD up here. When it goes below the zero line, you can see the zero line is in pink. So right here, it went below, and right here, it went back above. And you'll notice that down here through this period, so it went below right there. You can see where that changed to red and this changed to red. So this kind of gives you a sense for where that line is and what the overall trend looks like. So you want to pay attention to that when it goes below the zero line. I'm just kind of doing a technical analysis education here too. So Bitcoin, we know that went down. You can see right there, but it's still in an uptrend, short-term and long-term. If that continues to go down, it will get a short-term down signal probably tomorrow or Friday. And all of the momentum indicators are already rolling over. So keep an eye on that. But all you really have to do is at the end of every day, just look at each of these. And when you bring one up from the main page, the other two are on there as well. So that's what the indexes look like. There was a request from a subscriber to put the US dollar in, so I just added the dollar. The dollar is in downtrends across the board, long-term, short-term. Actually, long-term, it's up. It's right there. But short-term and long-term is down. And you can see where these cross, where the pink line crosses the blue and the blue line crosses the red. That's the medium-term down signal. Now, if we look at, I'm going to jump to the Magnificent Seven because that's where all the action was today. So the first thing that should jump out at you is every single one of them is in a short-term downtrend. Every single one. And Palantir just changed to that this week. Yesterday, in fact. And 4 of them, Google, Amazon, Microsoft, and Nvidia, all switched to downtrends this week as well. Let me look at Nvidia, because that's the one that did pretty well today. There's Nvidia. It is still in a medium-term downtrend. It's in a short-term downtrend, but it has a green bar, which means it moved up today. So if it moves up, probably needs a couple of more days of up movement for these to change back to up signals. And you can see right there, it's below 0. So it's below the 0 line right there. And this one, the long-term momentum went down as well, but it just moved back above it today. So this is giving a signal that it might be ready to move back higher. I'm going to look at this in a second when we look at the earnings. Amazon. Amazon, I think, has earnings next week. Gave a medium-term down 30th. Microsoft has already reported. Gave a medium-term down on the 30th. If we look at Microsoft, there's the short-term and the medium-term. So you can see that if you just follow the short-term trend, you would have been out of Microsoft already. But Microsoft reported, didn't do well, and continued to go down. Below the 0 line right there. So this short-term down signal was pretty accurate. Microsoft looks like it's heading down. Let's look at all of these. We'll just do it in succession. Google, below the 0 line, short and medium-term down signals. Starting to make a recovery. See if it can continue. Amazon, we just looked at that. Amazon, the same thing. Below 0, short and long. However, got a green candle today, green bar, and everything is moving up. We'll see what happens tomorrow. Tomorrow's going to be really important. Same with Apple. Apple has a short-term down, but not below 0, and it got a green bar today. So it might be recovering. Apple reports, I think, tomorrow. Meta reported tonight. We'll look at this in a minute. I had a great report. Short and medium term down below the 0 line. And this one, the longer term momentum is just beginning to move up. This probably will move above and give a signal tomorrow because Meta did well. Microsoft we looked at, Nvidia we've looked at already. Tesla, probably one more day it's going to give a short-term up. So there's a whipsaw right there. That's the thing that happens with the short-term signals. And that's explained in that link that I showed you, explaining how these things work. Short-term can move back and forth pretty quickly sometimes. If you got into it back here and then confirmed on the medium term or waited for the medium term, you could have ridden it all the way up. But Tesla looks like it's getting ready to recover. Here's Netflix. Same thing. All of these kind of look very similar. All of these big cap tech stocks have been heading down, but they might be ready to recover. AMD reported yesterday. Had a great report. Gap up in the morning. In fact, if I look at this on a different chart, you can see the gap up, and that right there is a black candle. That means it sold off all day long, but it ended higher than the previous day. That's what makes it black. The way to look at these candles is if it's closed like that, either black or red, think of it like a window shade. It's pulling the window shade down. So that means it's pulling it down, which means it opened up here and it closed down here. So it's closing the window shade. So this one gapped up from the previous day, but sold off all day. So it's closing the window shade, but it's still ended higher than the previous day. So it's black instead. With an open candle like these, it's the opposite. It's opening the window. So it opened down here and it closed up here. So that is when it's black, that means it closed higher than the previous day. Now, sometimes you get a red one like this one here that has an open candle, but it's red. And here's a red one here. There's one here. There's one right there. That means it closed higher than it opened, but it's still lower than the day before. So that makes it red, but it's an open candle, which means it closed higher than it opened. So just think of a window shade if you want to try to read these. That's the easiest way to think about it. Here's SMCI, looks very similar to all the rest. Here's Oracle. Oracle actually has been hanging in there and got a green bar today and did not go below the zero line. So Oracle actually is probably one of the better looking ones on here. And Palantir, I just added recently, also not below zero. Got a short-term down signal, but it could easily get a reverse up signal. Just needs to get back above the blue line, and that could happen just tomorrow. So that's what they all look like. Interesting day for all of those. What I want to do next is take a look at some of the earnings that came out, especially on some of those big cap names. So on the website, on the main page, and this is available for anybody, you can look at the earnings calendar right here. This uses stock charts. And if we look at reported earnings for the NASDAQ 100, now ARM just reported tonight. Meta just reported tonight. Qualcomm and AMD reported yesterday. So all of these are on here. Now what you'll notice is on ARM had a 61% difference on earnings. So up 61%. Meta up 9% on earnings. Qualcomm up 5.9. T-Mobile. Verisk Analytics up huge. I wasn't thinking about that one, but that was up huge. I'm going to take a look at that in a second. AMD down. Earnings were down slightly. So down 18%. Microsoft right here up just very slightly. So they sold off as a result. So let's take a look at some of these. Let's look at ARM first. Open this in another. So here's what ARM looks like. So this is today, but if we go and look at the after hours simple summary, you can see ARM is actually down 13%. So let's see, reported earnings. So ARM earnings up 61%, but it's actually down. Probably something to do with the future guidance. So let's look at Lam Research. Lam Research was up slightly, 2.9%. That's a semiconductor stock. So if we look at Lam, there's the chart. Big sell-off, but starting to recover. Lam, by the way, has a 10-for-1 split, but not until October. So it's selling right now for $9.21. So that's going to be a $92 stock if it stays there. If we go down and look at the after hours, sold off. That one doesn't look good. Meta. Let's look at Meta. Meta right here, sold off, looked like it was trying to recover. Some of the The momentum indicators are starting to move higher. It's basically keeping pace with its peer group. And let's take a look at the after hours for Meta. Meta up 5.7%, up $27 after hours. So Meta is doing well. Meta's heading higher. Here's Meta's earnings history. So this is revenue on the right, earnings on the left. And you can see if the green dot is above the gray dot, then they beat. And you can see today they just barely beat. So let's take a look at Qualcomm. Some of these semiconductor stocks. A lot of the charts look similar. I just want to see what they did after hours. Not doing much. Just sort of staying. Didn't beat by much on revenue. Did pretty well on earnings. Next one. Let's look at Verisk. Well, let's look at T-Mobile. Just out of curiosity. There's T-Mobile. Had a great day today. And if we look at the after hours, T-Mobile is just hanging in there, not moving much. Verisk up 38%, beat earnings. I would expect this one to be flying after hours. So this is today, had a big down day today. So, and it looks like it's underperforming its peers. So even though they beat handily, the market was not expecting that. And I don't see any data. So I don't know if 7:31, that's today. No, that was before they opened. So that was this morning. So they must have had bad guidance because they sold off all day today. AMD. Let's look at that. AMD actually missed, according to this, right here. But like I mentioned before, AMD had a black candle. So they started higher and sold off most of the day. Tried to make a comeback near the end of the day, which you can kind of see on the 10-minute chart right here. So gapped up, sold off, and then kind of went sideways and tried to make a little bit of a recovery right here at the end of the day. And if we look at the after hours, they're just basically staying static. And then what else? Microsoft. Microsoft reported yesterday. And I think everyone knows what Microsoft did. Didn't look too good. We'll see what they're doing after hours, after the Meta report. Up slightly, not by much. So they're not moving too much. And I think that's it. The only other one I want to look at here, of course, is Nvidia. So Nvidia had a good day today. So you can see it's been selling off consistently. Tried to make a recovery, hit the 21-day moving average, got rejected, came up now and just hit it again today. So tomorrow is going to be really important. You can see it's below the zero line, really since right here where it got rejected at the 21, moved below the zero line. It looks like today it just started back up on the longer term momentum. And it's just barely outperforming its peers. So it hasn't had a very good month, basically, or last couple of weeks. But all of these indicators look like they're just ready to start turning over. So it ended today at 117. It went all the way down here to 104, I believe. I could tell you. And I said this about Nvidia, that it was going to go down to about 106 or so. It actually closed at 103.73. So it went down at the low of the day was 102.50. So it went all the way down to 102.50, came back today all the way up to 117. And if we look at the after hours for Nvidia, we can see it's up 2%. Now it's up to 119. So it went from 102 yesterday, a low of 102, up to 119, basically in one day, or this is after hours, so up to 117 in one day. So Nvidia might be ready to make a recovery. And I've said for a while that Nvidia has a habit of running up into earnings, and earnings are 828. And you can see how they do against earnings. It's a beautiful 45-degree angle. They beat earnings every time, and they beat revenues every time, even though they keep raising the bar. So I suspect that Wall Street expects them to do that again, and will probably start accumulating Nvidia now into their earnings report on the 28th. We'll see. That doesn't mean they have to, but we'll see what happens. So that's pretty much it for today. One thing I will just show you under the Portfolios tab. At the beginning of the year, I've mentioned this before, I created Dividend Portfolios. I do a scan using Dividend Aristocrats, using the VectorVest scan, and also using my own scan that I've created, and there's definitions of what they are. And I don't change these, I just let it run for the whole year. So that, and at the end of each month, which was today, I update this on what the status of each of these is. So you can see Dividend Aristocrats is up 14.5%. This, by the way, is just the equity, does not include dividends. So up 14.5% through July 31st. So this is a little more than a half a year, but you can figure that out. You can annualize that. VectorVest is up 7% through today, and the scan that I created is up 15% through today. So all three of them are doing really well. Most of them are in, they're all heavy dividend players. But some of them are heavily into financials. So you can see right here under the industry, this is insurance, which has been doing well this year. Building has been doing really well, 2 building stocks. So you can see the ROI, Brown & Brown is the #1 ROI on each of these. There's one down here, which is actually a chemical specialty company that is the one that's dragging the whole thing down 35%. But even so, it's still up 14.5% for the year. And one of the reasons for this, which I'm going to change next year, is that at the beginning of the year, you can see the origin date was 12/29. This is below its 200-day moving average, which is not something that I looked at, but in the scans for next year, I will definitely be looking at that. So if I look at my scan, you can see a lot of these actually are banking stocks. And I didn't specifically think about doing it that way. It's just the way the scan worked out. So you can see here's a bank. I was a little bit concerned, and there's an insurance company, which is also financials. I was a little concerned when I first put this together, thinking, well, I think banks are probably going to do well, but this is pretty heavily weighted into banks for the year. But you can see they've actually performed really well for the whole year. The only ones that have underperformed is Bank of the Ozarks, Noble, which is a petroleum, Lear, which is auto and truck, actually a jet engine company, jet planes, and then OpenText, which is a software company. But even with that, even with these 4 underperforming, you can see the #1 up here, NatWest Group, a bank, is almost 70% up for the year. So we'll see how this turns out at the end of the year. But I update these every month, the end of the month, just out of curiosity to see how they're doing. All right, so that's it for today. I think tomorrow will probably be pretty good for the market. The earnings look like they're mixed right now, but some of the semiconductor stocks actually are doing pretty well. And in fact, if I look at, actually, let's do it this way. If I look at under the chart section, if I look at semiconductors right here, you can see they had 2 down days, and today they had a really nice up day. And that is a hammer candle, which is very bullish. So this may continue tomorrow. We'll see. It's actually, for the market to move higher, it needs to continue. And on that note as well, I have said that I did a whole thing last weekend about, actually on Monday, it came out on this year looking like 2023. And if that continues, then what we're going to get is a rally into August. We're going to get another sell-off, which will be lower than this recent one. In fact, I can actually look at the 2-year chart on the S&P right here. So here's last year. From here, that was July to October. And here we are in July. So think of that as the same as this. And then we went down and came back up, made another high. So that's what I'm expecting to see moving into August, make another high. If we cannot make a higher high, which I don't expect that we will during the summer months, then we'll probably get something similar to last year. We'll get a lower high and then a sell-off down to a lower low. And that will probably take us to, last year it took us to the end of October. That was October 27th, right there. So we had another lower high and then down to the low of the year. We may get something similar into September. September 18th will be the rate cut. And I think the market may take off from there, probably that week, starting that week, September the 18th. So we may get a little bit of a sell-off in October, but I don't think it's going to be a lower low. I think it's going to actually end up being a higher high. And that whole section between September and October will be the beginning of the end of year rally. Don't know if that's what's going to happen, but just from a historical standpoint, that's what it looks like. So we'll see. You can take a look back here, October, middle of October. That was 2022. 2022 was a cyclical bear market, so it basically sold off the whole year. We had another lower high in August, just like I think we're going to do this year. Went down all the way to middle of October. This year, I think it will be probably September like that one, but it may look similar to 2022 also before the end of year rally. Anyway, that's what I'm thinking. I'll continue to monitor this and we'll talk again on Sunday. All right. Thanks, everyone. Thanks for listening and safe trading. Take care.